Hello, my name is Brandon Cole, and in this video, we're going to show you exactly the strategy that I built to help business owners, real estate investors, and high-income earning professionals double their earning potential on every dollar that they invest. This is for you if you're a high-income earning professional and dissatisfied with the cookie-cutter financial options catered to the average American. Maybe you're a business owner, a real estate investor, or a high-income earning professional, maybe like in private equity or an attorney or a doctor. But most likely, you're a professional who maybe lacks the resources needed from your current advisors to explore alternative financial planning strategies. Or maybe you're on the verge of becoming the first to build generational wealth in your family, but you simply don't know exactly what your next steps are. Regardless, I'm here to expose to you an alternative option that you probably have never heard of. Now, to give some background, this method has allowed me to focus my time and efforts towards unique solutions for high-income earning professionals. It's also allowed me to build a consulting firm helping 6- and 7-figure earners enhance their liquidity and investment opportunities to a degree honestly not possible through the means of traditional financial methods. And most importantly, it's allowed me to spend a lot more quality time traveling the world with my lovely wife and son. But it wasn't always like this, though. I was just like every other financial services representative in the industry, offering the same repetitive services you hear from every financial guru you probably seen on social media. But I wanted to set myself apart from the rest of my competitors in the industry and focus specifically on a niche audience of professionals that I feel are underserved. I like to call you Henrys. And just in case you don't know exactly what that means, it means high-income earners that simply aren't rich yet. But now I'm actually servicing the audience of high-income earning professionals I so desperately wanted to work with. And in fact, because of the niche service that I offer, people like yourself find their way somehow to me. Over the years, I've developed an elite team of professionals I like to call my professional roundtable, which includes international tax and estate planning, mortgage advisory, and even private equity solutions. The beauty in our relationship is that we all work in collaboration in the benefit of my clients, making my team a one-stop shop for all your intricate needs. And if I'm being honest, I've actually never been more excited to be in business. So let's talk about what we'll cover. Number one, how to maximize the growth of your working capital without locking it up for the long term. First, I think it's important that I take a second to describe what I mean by working capital. For high income earning professionals, working capital may be the liquid savings in a bank, which is usually more than the 3 to 6 months of emergency fund savings for a rainy day. For business owners and real estate investors, this may be 6 to 7 figures of savings or financing that's either sitting in a money market account or high yield savings for business expenses, retirement, or investment opportunities. But regardless, this strategy that I'm describing has nothing to do with traditional qualified retirement plans, which is why you have so much more liquidity. Next, number two is how I'm going to maximize that growth of your working capital while doing it 100% tax-free. And lastly, how we do it with absolute zero risk. See, in the last 5 years, I've helped high-income earners enhance their finances in a way that really was thought to be impossible. And what I'm about to show you by far is the best way. And despite what many professionals may believe, the solutions to your financial problems are not black and white. I'm sure by now you're tired of the cookie cutter advice, the Dave Ramseys and the Susie Ormans and the basic investment options that are offered by every financial advisor. Trust me, I've been there and I've seen that. See, due to the lack of liquidity, the majority of business owners, real estate investors, and high-income earning professionals are typically forced to reinvest profits and or remove money from their supposed retirement savings to maintain lifestyle or maintain business expenses. More than likely, the lack of liquidity in your business, investments, or real estate portfolios can easily cause extra risk and limit your ability to scale. And I'm sure you can agree with that. See, volatility in the market not only affects stocks, but it affects values of real estate as well as cash flow in business. And all of this is going to have an impact on the trajectory of your retirement. And in the majority of cases, I'm sure you'll agree, to accommodate retirement income, usually you're going to be forced to liquidate either your investment, your business, or your real estate portfolio and demolish any type of inheritance that you were planning to leave to your children. But honestly, I get it though. The money has to come from somewhere. But if you plan it right, you actually could have both. See, now the scary part is the large percentage of financial advisors, CPAs, and talk show personalities like your Dave Ramseys either don't know or don't care that their advice is only servicing the average working American. not high-income earning professionals like yourself. And ironically, this blanket advice can be the difference between you just doing okay to you being great. But now, what you came here for, how high-income earners can leverage their liquid cash to actually become their own bank. My exact strategy for maximizing working capital is called the dual interest account, which, if you're wondering, is a max-funded and strategically designed cash value life insurance policy. Think of all of the benefits of a Roth IRA with zero limitations in annual contributions and complete control of accessibility when you need the money. Best part is there's downside protection against any possibility of losses. And here's where things get very interesting. See, even when the market collapses and interest rates are completely unfavorable and you need the liquidity the most, my system still works and I can prove it. And I'm sure you might be wondering how this is even possible, especially without taking losses, penalties, or taxes. See, the strategy works, and it works well because it's the only investment alternative that allows our clients to turn cash into an asset that can be leveraged against to serve multiple functions, hence the idea of the dual interest account. See, this specific strategy provides contractual guarantees on your principal and the interest earned, which eliminates the risk from market fluctuations and wild interest rate swings, making it a safer alternative to bonds, but giving you the upside potential of the stock market. And because of the extra liquidity options, our clients can borrow against their savings for immediate expenses while continuing to earn uninterrupted compounding growth on their principal. Now, let me explain how. See, we've revolutionized the way that you grow and you leverage working capital, especially when it comes to not locking it up long term. See, the majority of professionals in the financial services industry have a very basic understanding of what life insurance contracts are capable of doing. But I'll make this concept very simple for you to understand. See, uninformed financial advisors, CPAs as well, will argue that life insurance in a nutshell is a terrible investment. Now, what's funny is that life insurance is not an investment at all. In fact, it's more of an asset. Very much like real estate. And even real estate, by definition, isn't an investment either. It's considered property, or in other words, an asset. But depending on how you leverage it, it can be leveraged as an investment, just like insurance contracts. See, the concepts of each of these assets are just about identical. Lump sum contributions of the dual interest account are practically identical to down payments on a home. See, these lump sums will increase the immediate liquidity that you have to your cash value when you need it. Monthly and annual contributions are no different than ordinary or additional mortgage payments meant to pay down your home's loan balance and build up equity over time. Cost of insurance is just as necessary as an expense like property taxes if you ever expect to own a home. And lastly, like paying down that mortgage builds up access to equity, you've done the same with your dual interest account's cash value, which can be borrowed against for investments or business opportunities well before you're 59 and a half. Now, where the major difference lies is in relation to the rate of return. See, real estate, as we all know, probably has an average of about 3.5% that you can expect to earn on a year-to-year basis, while the dual interest account, an insurance contract, tracks the S&P 500's returns, historically averaging 7 to 10%. And see, the second difference is in relation to how you access your money. In this case, cash value versus accessing equity, especially when it's needed. Unlike borrowing real estate equity, there are no traditional bank qualifications that are needed to leverage the cash value in a dual interest account. There's no credit score check, there's no bank statements, no income verification, or business plans needed to access the cash in your cash value. Simply put, if you have it, you can borrow it. And the best part is the loans from the dual interest account are, unlike bank loans, offer a longer repayment period, typically around 12 months of simple interest only, which you can decide whether or not you're going to pay back at all. This gives you, the borrower, drastically more flexibility compared to a shorter repayment period of ridiculous terms from traditional banks. Now, with that being said, with the dual interest account, you can control the terms on your money, the way you're taxed, the way you earn interest, and even the rates that you borrow at, which in this case are guaranteed to be lower than anything that any banking institution would ever allow, especially in this high interest rate environment. And the cool part is you control the time frame when you decide to pay the money back, if at all. I think we can all agree, even financial advisors and the most conservative CPAs, that there is no other investment alternatives that would provide both the potential gains of the market, access to liquidity on your terms, with zero loss of your principal. At this point, I think you're starting to see the bigger picture, right? And this is what makes me say that the dual interest account by far is the best way to maximize your liquid savings or business capital without sacrificing protection, potential growth, or liquidity. And I'm sure you're wondering by now, but Brandon, how is this even possible? It's starting to sound too good to be true. And how does that old saying go? If it sounds too good to be true, then it is. Or maybe you just don't have enough information yet. See, unlike 401ks, SEP IRAs, and Roths, the dual interest account is not a cookie cutter strategy that any advisor is going to be able to offer or one that you can just qualify for. In fact, my team and I disqualify about 35 to 40% of our candidates that inquire due to various factors of suitability, specifically around their health, financial capacity, or their objectives. See, for those who qualify, though, it's the missing piece to their portfolio that they've been desperately looking for, which is why if you're a business owner, a real estate investor, or a high income earning professional, and you want to double the earning potential of every dollar that you have, you'll need a vehicle that allows you to earn interest on the same dollar multiple times. And I'm sure in the past, if you wanted to grow your working capital, wanted liquidity, or maybe needed to protect your principal, be forced to choose between something like a high interest savings account, which is known for losing value to inflation, or stocks and mutual funds, which can grow your savings, but have a high chance of being lost due to volatility of the market. As you can see, both scenarios are a double-edged sword. See, most high-income earning professionals find themselves in situations many call robbing Peter to pay Paul. But unfortunately for them, they happen to be Peter and Paul. There's no win-win scenario there. Trust me, I've seen it. I've seen it time and time again, and it doesn't matter how much money you make, the problem is still the same. And because you're obviously successful, whether it's in your business or your career, you're most likely overqualified for traditional retirement accounts like 401k, 403bs, and IRAs anyways. And honestly, you probably don't like the lack of control when it comes to liquidity or the fact that you have to wait until 59 to touch the money. And here's probably why. I'm sure you find yourself in certain circumstances needing to dip into that cash reserve for investment opportunities, business expenses, or even to pay taxes. And see, the issue with accessing money from qualified accounts or borrowing from banks on unfavorable terms is the interest rates, taxes, and penalties for accessing potentially your own money. See, this, my friend, is where the dual interest account shines compared to any other financial tool that may be available to you. I'm not saying it's the end all be all and that it replaces everything else, but I think it's safe to say it's an absolute must have to have in your portfolio. And I promise after watching this video, you might just kiss your high interest savings or your money market account or even your qualified retirement accounts goodbye. So I have to ask, what if you had a savings vehicle that allowed unlimited contributions regardless of how high your income was? One that converted all of your excess savings into an asset that you can leverage against without any requirement from a bank. One that allowed you to grow all of your money tax-free. And last but not least, if you passed away prematurely, it paid out a tax-free benefit to your family or to your estate, which was likely 5 to 10 times the amount that you originally put in. Once again, I think you're starting to get the picture. So let me show you how the dual interest account works. Whether you are a real estate investor, a business owner, or a high-income earning professional, instead of your excess liquid savings, whether it be personal or business capital, being piled up in a high yield savings account or locked in qualified funds, those funds could simply be reallocated to something like the dual interest account. And as mentioned earlier, this account is going to earn interest alongside the S&P 500, turning your excess savings into a potential supplemental tax-free retirement. See, this is all achieved while maintaining liquidity and acting as an ideal hedge, safeguarding all principal and gains against any possibility of losses. This can allow you to be more aggressive on other business and investment opportunities. And when cash is needed, you simply make a request to the insurance company of the amount that you're looking to borrow. And the best part is the insurance company uses your accumulated cash value as collateral to borrow against your death benefit. Now, keep in mind, the death benefit of this policy is not the sole reason why we're getting it. Because if you want life insurance, you can buy term. But we're using it as a line of credit to be able to borrow against, using our cash value as collateral. See, you can expect to take a loan at either 1 or maybe even 5% fixed rates. Best part is you get to choose which one that is. Now, these loans, or should I say lines of credit, can be used for just about anything that you could think of. Well, as long as it's legal, of course. And here's a couple quick examples of how our clients have used these. Some of our clients use them for business expenses or real estate syndications and developments. Some use it for private or hard money lending. Maybe they use it for college expenses or even a supplemental tax-free retirement. In some cases, some people use it to pay taxes strategically. Now, with that being said, all of this is done without interrupting the compounding interest that you're earning from your money tracking the S&P 500's returns. Now, regardless of how you use this capital, the flexibility in the policy loans from the dual interest account offers a greater control over your money compared to any shorter repayment periods of traditional bank loans. This is obvious at this point. See, this enables our clients to use the cash flow and periodic profits to reimburse themselves while doubling the return on every dollar borrowed with no additional risk. Hence, the idea of the dual interest account. Here's probably the coolest thing to consider. While our clients leverage their cash flow through their policy for life events, business expenses, and even investments, in the near future, this same account is going to serve as the ultimate tax-free retirement account well before they turn 59 and a half. Oh, and let me not forget, if you pass away prematurely, the remaining insurances pay out tax-free to your heirs in a protected family or business trust. And here's the cool part. My in-house professional roundtable will assist with all the estate and tax planning needs for your family to make sure that you guarantee that generational legacy. Don't take my word for it. Let's take a quick look at some of the people that we've helped. Like Mr. Barry, a 7-figure sales engineer maxing out his retirement savings with no match offerings from his employer. His wife happens to be a physician, and they were tired of the traditional tax-deferred investment options that they've been pitched over and over again, looking for more efficient ways to grow their money, specifically tax-free. Although he was unsure of how it was possible, when we implemented the strategy, it was actually a no-brainer. Things just clicked. We were able to convert a substantial amount of their savings into a supercharged alternative tax-free investment. Think of the ultimate Roth IRA, free from contribution limits or age restrictions on accessing your money, and protection, allowing them to keep more of his profits and accelerating their goals of an early retirement. And here's another example. My client, Miss Newton. By far, she's one of my favorite clients. She's the sweetest lady ever. She's the owner of a childcare service business, and like many other business owners, she has a pretty substantial tax bill on a yearly basis, but has a really big focus on leaving a legacy for her son. By funneling her cash flow and excess savings through her dual interest account, she can borrow against her policy and actually earn 3 to 4% while paying her yearly tax expense. And the cool part is while she's borrowing and earning this interest on what she's borrowed, she'll use her incoming yearly cash flow to replenish her borrowing power, all while not interrupting her compounding growth, leaving a massive inheritance for her son when she's gone. And here's the last example. This one hits close to home, specifically because this is my incredible wife, Pat, co-founder of FaceLab Aesthetics Med Spa and certified aesthetic injector. Facing a very tight deadline, my wife wanted to borrow from our dual interest account to cover the cost for our office renovations. Now, by doing this, she avoided tapping into personal or business lines of credit and instead, using our own funds for the renovation and completing the work ourselves, allowed us to save over $40,000 in labor costs. Additionally, because we did the work ourselves, it allowed us to negotiate with our landlord, and my wife was able to go 5 months without paying rent. And see, controlling the loan term meant that my wife could decide when to pay the interest on the borrowed funds. This flexibility allowed her to focus entirely on launching her business. Now, FaceLab Aesthetics, as I'm proud to say, generates about $80,000 to $100,000 in monthly revenue. So when it's all said and done, you really only have 3 options. Number 1, you can do absolutely nothing and nothing changes. Number 2, you try and work with another rep and hope that they understand half the information we just discussed. And no, I am not going to help you fix it after they mess it up. And number 3, you can allow my professional roundtable and I to help you implement this strategy with your own tailored design. And with that being said, I want to offer a free strategy session. Assuming you're a suitable candidate, we'll obviously create a personalized blueprint for your very own dual interest account. And along with that, my professional roundtable will pinpoint any significant blind spots that might need some attention. And that way we can cover all 3 areas of importance with tax, estate, and financial planning as well. And look at that, we finally made it to the end. I'll say this, I appreciate your time. Feel free to click the button below this video to book your strategy session now. Look forward to chatting with you, and you have a blessed rest of your day. See you on the call.